What did you make of the latest print from the U.S.? Do you think this is just more than base effects?
Oh, yes, definitely more than base effect. If you look at the details on a month-on-month basis, right, the headline rose 0.8% and the core 0.9%. But I will still say that actually the driver behind that was the pent-up demand from consumer in the U.S., helped by the stimulus check that came in, and also like the logistic bottlenecks and higher fuel prices. So all these factors is the one that is pushing up for this CPI report. But one thing to bear in mind is that the Fed actually expected that this, and they named it this to be transitional, and we have to think whether this factors is likely to persist until next year or beyond. So I think the current stance, as we hear from the vice chair, is that they still see that it is transitional and don't think that is structural. But obviously, what we are seeing on the data front is not helping on this debate, and market will continue to second guess in terms of whether the Fed is really correct in terms of their projection.
Is there anything the Fed can do, Christian, regarding some of these supply crunches we've seen around the world?
I think it's relatively limited. In a sense, is that I think the Fed, if they can keep on their expectations that this is transitional, this would already help in terms of calming the market, even though we still see volatility at this. I think all these things are important, and especially on Asia as well. A more moderate Fed expectations and a loose monetary policy actually helps in terms of the dynamics going in Asia at this moment.
Right, Chris. I mean, just keeping that focus on Asia. If you do get the market calling this one right, and now the expectations are that you're going to get a hike at the end of next year, what are the implications then for Asia if that was to come to pass?
I would say, obviously, market will debate about whether it is really the timing in terms of tapering and the first lift off. If this high CPI prints really persists for longer and the so-called transitional price pressure is going to be even more transitional, then market will actually expect that the Fed is going to be tightening earlier than expected. And the implications on Asia is negative in my point of view. Not only the equity prices is likely to be feel pressured, but also from a funds flow perspective, the capital is likely to go into the DM area and probably less on Asia Pacific regions, and this would disproportionately be pressuring more on the South and Southeast Asia economies, especially those that actually record current account deficits that we saw.
To what extent are the food price rises that we're seeing in Asia constraining central bank reaction?
Yeah, it is. At this point in time, we see that it's limiting their additional room for easing. We already see central banks in India and Philippines actually not cutting rates at this time, despite the fact that COVID is still spreading in the economy, and then there's downside risk on growth. So I'll keep a close watch on that. I think, in a sense, it's also reflect in terms of market expectations of the monetary policy in the States as well. So the risk of Asia Central Bank likely to tighten towards the end of the year is on the rise, but at this time, my still base case is that they probably stay on put at this moment.
And Christian, what sort of price pressures do you think Asian exporters are facing right now on the back of the rise in commodity prices? Do you think that there is enough pricing power for them to actually pass these inflationary pressures, these charges to consumers?
At this moment, probably not as strong. I would say for regions, except for a few North Asian economies that relatively get their COVID situation contained. I think right now, like most of the economies in Asia are still actually struggling with COVID, and the domestic consumption is not really back online yet. So even though right now that you have input prices rising, possibly all this pressure is like to be taken by the manufacturers and the businesses for this moment. Later on, right, when the economy successfully contain COVID, then I think gradually it may pass on to consumers. But I think the pace of that is still likely to be measured.
Christian, do you have a grip on the damage that this devastating virus is having on India right now in terms of its economy for the rest of the year? Are you getting clarity on that?
I still haven't really get a clarity. I would say that the reasons why there was like a rise of this wave is because of the more lenient, controlled social distancing is going on in the country. It is really rising the possibility that there may be another more harsher control from the national government's level going down to the economy, and it is really very hard to gauge at this time that what would be the actual impact is it on growth. But I would say the direction is really on negative, and the direction is really prompting for more easing from the RBI to help the economy as well. So I'm still concerned on India in particular because of this COVID-19 renewed outbreak.